When it comes to all equity ETFs, XEQT often gets all the glory. However, are they really the king of the mountain? Fasten your seatbelts, folks. This is going to be a good one. An all equity exchange traded fund, or ETF, is a type of investment fund that exclusively holds stocks. This makes them a pure play equity investment as they do not hold bonds or other securities. All equity ETFs are literally designed for investors seeking long-term capital growth with, of course, full exposure to the stock market. These ETFs typically provide, well, a lot of diversification across different sectors, industries, and geographies, which can help mitigate risk while maintaining the potential for higher returns. That diversification is a huge advantage for all equity ETFs for sure. Most ETFs will give you some basic diversification instead of holding individual stocks, which can expose investors to the risks of single company performance. ETFs typically spread investments across a broad basket of equities. This reduces the impact of poor performance from any one stock or sector. A good all equity ETF is going to take that diversification to the next level. They will also include international stocks to ensure global diversification, which further reduces reliance on domestic economic conditions. Investors then gain exposure to a mix of Canadian and global markets, balancing the risks associated with the Canadian economy alone. The current economic environment does present challenges for the market, including, of course, all equity ETFs. The recently implemented U.S. tariffs on Canadian imports threaten to impact key Canadian industries, particularly manufacturing, natural resources, and agriculture. These sectors contribute significantly to the Canadian markets, thus meaning Canadian-focused ETFs may face significant downward pressure. Additionally, companies affected by tariffs may see reduced revenues and profit margins, which could negatively impact overall returns. An all-equity ETF with solid global exposure will still feel some of the tariff pain, but having a global exposure will help insulate the impact for sure. Another factor influencing returns is the looming possibility of a recession. Economic downturns historically lead to market volatility, and unfortunately, all equity ETFs lacking fixed income assets have no built-in buffer against stock market declines. They do have their global diversification, which can once again, it can offer them a little bit of isolation from regional recessions. If in the worst case scenario we entered a global recession, these ETFs would certainly be impacted for sure. A sub to the channel is the best way to get impacted by future content. XEQT is a huge favorite of many Canadian investors, and I will say that I am a huge fan for sure. At the top of the video, we did ask if they are the best, and we are about to find out. We're going to look at 5 all-equity ETFs and let their fundamentals speak as we crown Canada's king of the all-equity ETFs. We will be ranking them based on their one-year total returns. So without any further ado, let's do this. Kicking off this list, we have the CI Equity Asset Allocation ETF with a ticker of XEQT. They seek to provide long-term capital growth primarily by investing in ETFs that provide exposure to a portfolio of global equity securities. This one is the new kid on the block, as they've only been listed since May 17th, 2023. At the time of recording, their price was coming in at $25.68, and they have a NAV of $25.50. Those assets under management, $8.92 million. So they are a little on the small side, but they're brand new. Those assets will build as this ETF develops. Looking at their fees, they have a management fee of 0.22%, and their management expense ratio coming in at 0.30%. When it comes to dividends, they have a yield of 4.43%. That's a quarterly dividend of 13.4 cents per share. Looking at their returns, on their 3-year return on investment, that's coming in at 28.53%. Factor in the dividends, we get a total return of 32.72%. On their 1-year return on investment, that's coming in at 12.83%. Adding in the dividends, we get a total return of 14.67%. Their 3-year annualized return, that is coming in at 12.83%. I do like these numbers, and I think it is going to go without saying that that will be the case for all of these ETFs today. Coming in at number 4, We have the Global X All Equity Asset Allocation ETF with a ticker of HEQT. They have a price of $18.08 and their NAV is coming in at $18.06. Those assets under management coming in at 257.32 million. Looking at their fees, their management fee coming in at a nice looking 0.18%. Management expense ratio 0.20%. Moving to their dividend, they have a yield of 1.726%. It's a monthly dividend of 3 cents per share. Looking at their returns, their 3-year return on investment comes in at 27.23%. Factor in the dividends, total return 30.50%. On that 1-year return on investment, that's coming in at 13%. Total return after we add in the dividends, 14.94%. Their 3-year annualized coming in at 9.28%. This is actually the only one on today's list with monthly dividends. So if getting paid every month is important to you, this may be your all equity ETF. Taking our third spot, we have the BMO All Equity ETF with a ticker of XEQT. At the time of recording, their price was coming in at $51.87, and their NAV also $51.87. Assets under management 180.02 million. Their fees, we got a management fee of 0.18% and a management expense ratio 0.20%. Looking at their dividend, it is a yield of 1.902%, quarterly dividend of 22 cents per share. On their return front, their 3-year return on investment 27.57%. Factor in the dividends, total return 32.98%. On their 1-year, that return on investment coming in at 13.85%. Factor in the dividends, total return 15.78%. Their 3-year annualized return, that's coming in at 9.97%. I do like BMO ETFs quite a bit, and this is a good one for sure. You will notice today that the difference between first and last is, spoiler alert, less than 2%. In our almost top spot at number 2, we have the iShares Core Equity ETF with a ticker of XEQT. Say it isn't so. They are ranked in the second spot, but could they still be the best? We're going to find out. Their price at the time of recording is coming in at $33.90. Their NAV comes in at $33.89. Those assets under management, 6.78 billion. Looking at the fees, management fees 0.18%, management expense ratio 0.20%. Looking at their dividend, they have a yield of 2.015%. That's a quarterly dividend of 27.5 cents per share. On their 3-year return on investment, that comes in at 28.95%. Add in those dividends, total return 35.70%. On their 1-year return on investment, 13.95%. Add in the dividends, total return 16.25%. Their 3-year annualized returns coming in at 10.71%. I really do love this ETF, and these are fantastic numbers for sure. However, who could have pushed them to number 2? In our top spot at number 1, we have the Vanguard All Equity ETF with a ticker of VEQT. If anyone was going to edge out XEQT, leave it to Vanguard. At the time of recording, their price is coming in at $45.18. They have an NAV of $45.17. Assets under management, 6.37 billion. Their management fee coming in at 0.22%. They have a management expense ratio of 0.24%. Looking at their dividend, their yield, pretty small, 0.766%. And this one it's an annual dividend. Once a year, folks, 71.3 cents. Their 3-year return on investment, 27.81%. Factor in those dividends, total return, 34.53%. On their 1-year return on investment, 14.76%. Add in the dividends, total return 16.57%. Their 3-year annualized, that's coming in at 10.39%. Well done, Vanguard. But did you actually dethrone XEQT? Let's look a little deeper and find out. On the 3-year return, XEQT edged Vanguard 35.70% to 34.53%. Also, on the 3-year annualized, XEQT also won 10.71% to 10.39%. Based on XEQ taking 2 of the 3 return categories, I kind of have to say their crown is safe. XEQT is still king of the mountain. However, all of these ETFs today are contenders for sure. As I said earlier, the spread between top to bottom was less than 2%. In other words, any one of these all equity ETFs could be a great fit for your portfolio. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on PPL. Thank you for watching, and I will see you in the next video.